Well, good day to all of our awesome internet friends, family, and following. This is a special training. This is designed for those who have been following us for a while, as we are just releasing an amazing trading account that we refer to as Jaguar. Perhaps you are watching this some months after Jaguar has launched. We do want to say we pray that you and your families are safe as we're cutting this particular training. Hundreds of millions of people all across the globe are pretty much consigned to their homes because of the coronavirus. And we're not here to pander in fear, but we do want everyone to take it seriously and, protect you, protect your families. That's the most important thing, obviously, is your health and the health of your loved ones. All right. Now, since most of us are kind of cooped up, we like to do this anyway with all of our trainings. We'll have to start off with something that's nice and picturesque, designed to get you to dream again. Don't you put those dreams on the shelf, okay? Don't you stop dreaming just because we're going through this pandemic. All right, let's go to work here. What I'm going to do in today's training is I want to talk about some of the expectations that you need to bring to bear when leveraging Jaguar. So let's talk about this amazing account. I believe this account, ladies and gentlemen, is going to help you become completely and totally and utterly financially free. All right, so I'm going to go to my FX book for the majority of the training. Give me just a moment. Okay, before we go to my FX book, one of the reasons I really want you to set aside everything you have going on right now and watch this complete training is because even before Corona, most people were behind on very key financial milestones: retirement, getting out of debt, paying off college debt, so on and so forth, college fund for the children, just being free, being able to make decisions based on your heart and not based on your checkbook. All right. So I want you to know you're not by yourself. If you've seen portfolios decline, even if you've seen portfolios crash. Here's from Bloomberg. They were talking about a particular investor, a particular trader. Guy's worth quite a bit of money, but he took $75 million in losses. And so what I'm going to share with you is designed to give you some hope without hype, without rah-rah. I doubt that anyone watching this video has lost $75 million, because likely you wouldn't be watching this training, because that would mean you probably still have, as this gentleman has, still hundreds of millions of dollars in net worth. But I just want you to know you're not by yourself, and particularly with what's been happening with the virus. So let's go to Jaguar real quickly. All right. Now, so we set up a test account prior to launching Jaguar to the public. And as I'm cutting this particular video, it's only been available to the public for like a couple of days. So I'm still going to do some training from the tracking account, although by the time you see this, I'm not sure when you'll come into our portal, which is absolutely free. You may have a different tracking account for you to follow along with, one that would be a real money account. Okay, so this was before we launched. All right, and I want to show you a couple of things. So I'm going to scroll down, and in the month of March 2020, when much of the global financial markets were taking an absolute beating, this account did 49.18%. Just so you know, our target is to net 12.5% per month. If we can do that, we know that in 3 to 5 years, it's just a matter of math, we can get you completely and totally and utterly financially free. I don't know that we'll have time to go through our calculator in this training or not. We'll see. If not, then likely there'll be something maybe even beneath this video that may show our 3 to 5 year game plan based on our compound interest calculator. Okay, so 12.5%. And by the way, I'm at my FX book, which is a third-party reporting site, and sometimes it will have some pop-up notifications and a little noise there. Okay, so when the Dow Jones, for instance, had one day that it was down almost 3,000 points. One of the worst days in the history of the Dow. This account did 49%, almost 50% for the month. Now it's slightly down as I'm doing this recording for the month of April. And if you were to look at this without this discussion, you might think, oh my gosh, this thing is performing terribly because look, today it's down 3.1%. By the way, did I mention 12.5% net is what we are targeting for our system, okay? All right, so 49% as a gross return is far more than what we need to hit our target. All right, so you might be looking at this and you see this and you say, oh my gosh, we're down 3.1% for the day, down almost 10% for the week, down 2.33% for the month. Well, that's why I'm doing this training, because you're going to see days like this. You're going to be able to follow the tracking account, okay? And you're going to see days, you're going to see weeks like this. We're not going to win every trade. We're not going to have winning days every day. We're not going to have winning weeks every week. We're not going to have winning months every month. But here's what I want you to get, is the hallmark of Jaguar is this. On average, what we win when we win will be more than what we lose when we lose. Are we going to take losses? You better believe it. And there are going to be times that we're going to have streaks. We're going to have winning streaks. I don't want us to get too high when we have those. We're going to have losing streaks. I don't want us to get too low when we have those. Okay? So I want to walk you through real quickly. We're going to go through the history and we're going to see winning streaks and losing streaks. All right. So there's three strategies that are traded within the Jaguar account. One that we call the big swing strategy. All right. And in other trainings, we'll break each of these strategies down in more detail. And that particular strategy, every strategy, by the way, will have something called a stop loss. A stop loss says stop my losses. Give you a stock market example. Buy a stock, it's at $10. If you have a $9 stop loss, the stop loss says, hey, get me out of the stock if it gets down to $9. It's a way to get out of the trade, take the loss in that example, but not have a catastrophic loss. And that's the whole idea of having stop losses. Now, listen, I can tell you, we know what it's like to trade with stop losses. We know what it's like not to trade with stop losses. As a matter of fact, once upon a time, we got really clever. We said, okay, we were in some positions and we were about to get stopped out. And we said, you know what? Let's take the stop losses off and let's do a hedge, meaning we were in some sell positions on a particular asset. And we said, well, if we get into some buys, if it continues to go up, the buys will win and that'll help offset the losses and vice versa. Well, guess what? That didn't work. Okay. So the moral of the story, we always will trade with stop losses. Okay. All right. So big swing is going to have stop losses of up to 4%. Now that's aggressive. That's aggressive. Okay. A lot of professional traders won't trade with more than 2% risk on any one trade. The reason we are as aggressive on the big swing trades as we are is because of that hallmark. We know that if we're right just 50% of the time, that on average, when we win, what we win will be more than what we lose when we lose. Now, so we're going to have some losing streaks. I want to show you a stretch of losers right here. Okay, you're going to see quite a few losers here. Now, most of these were not our big swing trades. These were other trades. We've got a trade. I've referred to it as weekly swing trades. So if you hear me say weekly swing trade, or if you hear me say mid swing trade, I'll be saying the same thing. I'm going to start converting that language to say mid swing trade as opposed to weekly swing trade. Okay, and a mid swing trade is a trade. It normally takes several days for us to hit our targeted profit when we hit our targeted profit. Okay, so the mid swing is normally the profit target isn't quite as large as the big swing trades. Now, those trades will typically have a risk of about 2%. All right, so each trade will have a risk somewhere between 1% on the low end, 4% on the high end with the big swing trades. And then we've got our intraday trades. And those are trades that in many cases will be out the same trading day. Not all of the time, but in many cases will be out the same trading day. Those trades will typically have a 1 to 2% risk profile. Okay. All right. Now we're going to have losing trades. Okay. We're going to have losing trades, and we're going to have some streaks. So you can see here, we've just endured a little streak here. And so let me highlight this. All right. And you can see, all right, this particular trade down 0.5%. This particular trade down 0.49%. All right. This particular trade down 1, down 1, down 1, down 1. Well, you know, those ones even start to add up over time. Okay. But here's what I need us to get. With our big swing trades, we're going to be in those trades in many cases several days. And so what may wind up happening, as what has happened here as I'm showing you, is our other trades that aren't big swing trades, we were in those, they didn't go our way, they got closed out, we took losses on those, okay? But now, this is what I want you to get, okay? Let's go all the way back up here. And so right now it's showing, gosh, we're down for the week. We're down almost 10% for the week. But that's not the entire story. Let's look here where it says balance. All right, so here was a $10,000 account. This particular account launched on March the 3rd, 2020. I'm cutting this particular training on April the 2nd, 2020. Take a look so you can see my my time here, okay? So we're right at a month, and this account is up 45% in a month. Now, I want that to sink in from the balance perspective, meaning trades that have closed out. I want that to sink in. A 45% month. Yes, the month of March, the account was at 49%, okay? And it's given back some profits this particular week that I'm cutting this particular training. But here's what I want you to see. Okay. I want you to pay attention to where it says balance. Okay, $14,570. And then I want you to look at where it says equity. $17,192. Okay, now what does this mean? What does equity mean? Well, first off, let's make sure you understand balance. The balance is any deposits that you've made, any withdrawals, you know, so obviously if you've made a $10,000 deposit and you withdrew $1,000, all right, that would impact your balance, okay? And then any closed positions, whether they were winners or whether they were losers, that's your balance. Your equity represents where does your account stand given the current open positions, the current open trades. So we're in trades right now, and some of those are winning, and some of those are losing. If the traders were to close out all of those trades right now, where would we stand? That's what your equity represents, okay? A lot of times in this space, you know, people that have platforms or what have you, they focus in on the balance, and that's cool. But the reality is we want to put more emphasis on equity. Now, we were one of those platforms that we focused a lot on the balance. But over time, we've seen, you know what? It's the equity that really matters. It's what's happening as when those trades. Now, the reality is that those numbers change, and it can change fast, all right? But this is what I want you to get. With our big swing trades, we're going to be in trades, and just because we are profitable doesn't mean that our trader is going to close out those trades. He has targets, and in many cases, those are big profit targets. Now, there'll be times when we'll be in trades and the character of the market changes and he closes out the trades early. Or there'll be times when we're really profitable and he may close out a portion of the trade to go on and bank some profits. But he's not just going to close out just to close out. He's not going to close out even partial profits, because we're up. Some of you will understand this, 20 pips or 30 pips or 40 pips. No, he closed out a portion of a trade as I'm doing this today. We were up 300 pips. Now, he believes that thing could go another 300 or 400 pips. So he doesn't want to close out the entire position. All right. So he closed a portion of it out. All right. Just to bank some profits, because in the marketplace, we are always going to expect, even if the markets are going our direction, we're going to expect some type of retracement. All right. So, a $10 stock doesn't normally go straight to 100. It makes 10 to 11 and it backs back down to 10.50 and goes up to 11.25 and backs down to 10.75 and goes up to 11.75, and you get the point. Okay. So what I want you to understand when you're taking a look, whether it's your account, all right, as you go into your PAM portal, for those of you that are already with us, yes, you'll look at the balance, but I also want you to focus in on the equity, because sometimes the balance figure could be a little deceiving, because it may say, okay, well, here's our balance, 14,570, but let me show you what's going on in the account right now if those trades were closed out. Now, there's no guarantee that all the trades that we're in collectively right now, they're profitable. There's no guarantee that those trades will stay in those profits. Okay. So oftentimes what our big swing trader will do is, once they are profitable, as many of these trades are profitable, he will move the stop loss that was originally designed to protect us from losing. He'll often move the stop loss to a break even. So even if it retraces all the way back to our entry, we don't lose on the trade. Or sometimes he'll put the stop loss even in profit territory. The key that I want you to walk away from this is this, okay? Be patient. We call our system 3 to 5 years. This is not 3 to 5 weeks. It's not 3 to 5 days. This is not 3 to 5 months. Be patient. And so when you're looking, and if you see, oh my gosh, we're down today. Oh my gosh, we're down for the week. Oh my gosh, we're down for the month. Also look and see, well, where do we stand equity-wise? Because it could be that the balance is down because some trades, they cut some losses short, went out and closed out some trades that were not going in our direction, but are holding on to profitable trades so that the profits can run. And that's what we want to do. In times past, even with our system, we had the inverse. We were cutting profits short, allowing some losers to run. And then we had to sit back and do the numbers and say, you know what, the numbers never lie. And so let me finish with this. So here's what you want to see, okay? Here's what you want to see. All right, I'm going to bring up my calculator real quickly. Pay attention if you're coming to the tracking account, okay, for Jaguar. Pay attention to where it says average win and average loss. Now, some of you will understand what this means by pips. Some of you may not. All right, and inside of our portal, we have a series of training on the Forex basics where you'll understand that kind of stuff. But this is very simple. If you take in actual measurable dollars, all right, the average win, 275.08, okay, and you divide that by 198.23 because that's the average loss in dollars. Now, by doing this, by taking what the average win is, dividing it by the average loss, you're going to come up with a ratio that I'll refer to as our reward to risk ratio. Now I'm going to click equal. Okay. All right. So you see a ratio. What's this 1.38 mean? All right. What this means is, so far, for every dollar we have lost in a losing trade, we have averaged making $1.38, almost $1.39. Let me say that again. What this does, all right, and so what do we do? What do? We take the average win, whatever that happens to be, 275.08. We divide that by the average loss, in this example, 198.23. Okay? And the answer tells us if we take a losing trade, we lose $1. This tells us, well, what's our average winner? Now, think this through. Would you play this game? Let's say we're right just 50% of the time. And we're typically right a little bit more than that. But this is not a trading system. Jaguar's not a system where we're going to win long-term 75, 80% of our trades. That's not going to happen, okay? If we win just 50% of the trades, the methodology is based on if we just win 50% of the trades. But on average, when we win, what we win is more on average than what we lose when we lose. We will have a phenomenally successful platform. By the way, this isn't even our target. Our target is $1.25. Our target is $1.25. Okay? All right. So what I want you to do is as you start to go through and look at either this tracking account, and we'll be rolling out a real money tracking account here very shortly. By the time you see this, it may already have been rolled out. I want you to come down. I want you to look at where it says history. And I want you to go and I want you to look under where it says gain. You see the percentage gain or the percentage loss on various trades. And I want you to spend a little time here, because what I want you to see is those times when we hit on some trades, like right here, okay? We hit on this trade right here. It was a 9.68% return. And in this column here, this shows you what that meant in dollars and cents, okay? We won't get a trade like this every day. We won't get a trade like this every week. We may not even get a trade like this every month. But every now and then, this one trade generated almost a 10% return. So this one trade, all right, we're down right now for the week 9.72%. Yet this one trade right here, one trade would have erased all of those losers that I just showed you before. I just showed you a losing streak. But look at the losing streak. 1.66%, 0.5%, 0.49%, 1, and some change, obviously. Okay? This one trade right here, 9.68% winner. I can show you, look at these two trades right here, a 13% winner. So I just showed you several trades where we lost about 1% on those particular positions. This one trade, this 13% trade could erase 13 of those. And then it was followed by an 8.48% trade. Okay? All right. So listen. Jaguar. Say it with me. Jaguar. Say it with me. Jaguar. All right. We're going to be cutting a lot of content for those of you that already have our portal, so you better understand Jaguar, feel more confident and comfortable with Jaguar, particularly if whether it was our platform or some other platform before Jaguar came along that maybe you took some losses, maybe even you had your head handed to you on the platter. We've been there. Believe me, I know what that feels like. Okay. But it's not how many times you get knocked down that matters. It's how many times you get your catuity back up and get back on that horse. All right, ladies and gentlemen, Jaguar. Listen, if you are new to us, if you don't already have our portal, there's likely going to be some call to action where you can get our portal. It's absolutely free, no monthly subscription, no annual subscription. Come inside, get as much or as little information as you need to feel comfortable setting up your own Jaguar account. With that being said, we love each and every one of you. Let's change the world together, starting with yours. Let's get you completely and totally and utterly financially free in the next 3 to 5 years. Listen to our Disclaimer King.
Welcome. I am your Disclaimer King. Please pay attention to this very important disclaimer. While our system is designed to get you completely and totally and utterly financially free in the next 3 to 5 years, trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high degree of leverage can work for you, but can also work against you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all of the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Today's training will introduce a fully automated 100% hands-free Forex managed account. This is referred to as a PAMM account. While the system is automated and 100% hands-free for you, it is manned by real Forex traders. This PAMM account is not registered with any US regulator, NFA or CFTC. In turn, products or services in our Forex system are not intended for residents of the United States. Information and services through our website and training are accessible worldwide. However, it's not directed at residents in any country or jurisdiction where distribution or use would be contrary to local laws or regulations. The responsibility is on the individual or entity to seek professional advice with local laws or regulation based on residency or jurisdiction of that individual or entity. Now, back to my training partner for today's training. Happy trading!